Hello and welcome. My name is Alex Romero from the GASB Learning Solutions. On this week's Genuine Learning blog, we will be discussing the GASB's exposure draft on subsequent events. So this exposure draft was released in November of 2024. A little bit of background about this area is that previous guidance had come from the AICPA, and so it was part of GASB 56 and the codification. So this is going to be updating to bring it to being GASB specific. The objectives in this area is really to improve the financial reporting requirements for subsequent events. So we're going to be looking at modifying that subsequent event definition and the time frame, and then looking at the issuance date, which has been an issue in practice, knowing exactly when that issue date is, and there's been some discrepancy in how that's been applied, and then clarifying the recognized and non-recognized subsequent events, and finally establishing specific notes disclosures for those non-recognized events. We're first going to look at our subsequent events definition. So this differs from previous definition in the use of plain language and explaining the subsequent events time frame. So we're looking at transactions or other events that are occurring after the financial statement date, but before the date the financial statements are available to be issued. So there we have available to be issued. So this could be interpreted different ways, but we see in this exposure draft that there's an explanation of what that is. So our available to be issued is defined as the financial statements are complete in a form and format that complies with GAAP, and all approvals that are necessary for issuance have been obtained. So one thing to point out is that this new paragraph does not mention recognized and non-recognized subsequent events. It only focuses on the subsequent events definition. We move next into two paragraphs about recognized events. So the first paragraph is describing what a recognized event is. So it's a subsequent event that had indicated that the conditions had existed at the financial statement date, and it's informing inputs to accounting estimates as of that financial statement date. The effects of this recognized event should be incorporated into the measurement of your accounting estimates as they're being reported as of the financial statement date. Now, the second paragraph in this section previously came after the non-recognized events in GASB 56. This exposure draft and GASB 56 paragraphs both provided a recognized events example and noted that the professional judgment needs to be used here and knowledge about the facts and circumstances when identifying recognized events. But what I noticed here and what I like is that this exposure draft example really supplies only two scenarios regarding uncollectible accounts receivable. So we have the one scenario where it is a recognized event and then another that is not. In the GASB 56 example, we see a settlement of litigation at the end of the example, which really complicates it, and ultimately the comprehension and application consistency of what a recognized event is. We then move on to non-recognized events. So there was a perceived lack of clarity regarding what specifically constituted a non-recognizable event and what should be included in those note disclosures. So a non-recognizable subsequent event is going to be something that has a significant effect, whether that be favorable or unfavorable, on the financial statements, but it's got to be in the reporting period in which that event occurred. And then they provide us a bulleted list of some of the different scenarios that we would come across. So it could be a debt issuance or debt-related transaction, maybe a government combination or disposal of government operations. It could be a change to the legal separate entities that are composing the financial reporting entity. We also could have a different tax rate that was enacted. So we had one tax rate last year and there's going to be a new tax rate this year. And finally, finally, it could be a transaction or other event that is significant enough that the information that's in the proposed note disclosure is going to be essential for that financial statement user to have when they're making decisions and assessing the accountability of the entity. So non-recognized subsequent events do not inform the conditions that existed at the financial statement dates, so therefore the effects should not be incorporated into the amounts that are going to be reported in this financial statement date. Lastly, we are looking at the notes disclosure. So prior to this, they weren't very specific as to what should be disclosed. And so now we are looking at having a description of the non-recognized event and an estimate of the effect of this non-recognized event on the basic financial statement for the reporting period in which that event took place. Now, if you're not able to determine an estimated amount, that's fine. You just need to explain why you're not able to do so in that notes disclosure. So what are our key takeaways from this exposure draft? So the objective is to provide essential information about certain subsequent events that is more consistent, it's going to be more relevant, reliable, and most importantly, more understandable. So we're looking at subsequent event time frame, and the term issuance dates are defined. We have further clarification on what a recognized event and an unrecognized event, plus a very specific example. And we have those note disclosures that are going to be speaking to exactly what we need to say about our non-recognizable event. One thing I have at the bottom here is Appendix B, Basis for Conclusions. So this is included in all of the GASB standards and in these exposure drafts, but I think it's important to bring that up because this is an area where it describes the why behind each paragraph in the proposed exposure draft. It's a great resource to fully understand the intent and the considerations behind each of these key areas. So previously issued standards, I really feel like you had to sit down and concentrate on exactly what the literature was saying and how to apply it. This exposure draft feels very different. It is comprehensive, it provides practical examples, and the information is broken down and bulleted so it's easy to locate the information, the details, and the examples. Our proposed effective date for this exposure draft would be for fiscal years beginning after June 15, 2026, and earlier application would be encouraged. Now, comments are going to be due February 21st, 2025. And when I was comparing this exposure draft to Statement 56, I believe most will appreciate the improvements here that have been made and the details that have been added for the subsequent events. But I encourage you to read the exposure draft and Appendix A for that full background and Appendix B to understand that why, and then consider submitting a comment. This is your opportunity to help craft the statement. When you're drafting your comment, include aspects that you really like and why, plus those that you don't like and why, with alternatives that you believe the GASB should consider. We do have a link to the exposure draft in the comments below, or you can access it on the GASB's website. Thank you so much for joining me today as we explored GASB's exposure draft for subsequent events.